All right, let's go.
Marriage gets hard when you disagreeing. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commerce.
New beginning, prosperity, abundance. Family will continue to walk by faith, not by sight. We know that God will supply.
What's up, good people?
What's good?
Welcome to episode 7
Episode 7.
of Marriage, Family, and Business. I'm Katina.
I'm Vernon.
And in this week's episode, we're still talking about life insurance because it's still Life Insurance Awareness Month.
It's the last one.
Last one. This is the last episode about life insurance. Last week is Marriage, Family, and Business. If you saw it, we interviewed married couples, family members in business together.
Mm-hmm.
So with that, this week is about having life insurance in your business as a business owner for your business partner or important employees.
Yes.
Okay.
Yes.
So we're going to start it off with a scenario.
Okay.
It's two friends.
Mm-hmm.
They're a dynamic duo, and they start this business together as a thriving coffee shop. Let's say the name of the coffee shop is called the Brew Sisters.
Let the adventure begin.
Yes, and it's Jenna and Alex.
Uh-huh.
Now, they have this business together. They built an amazing brand, but as business owners, they know they need to plan for unexpected causes or unexpected things that occur.
Okay.
A lot of time, business partners are afraid to talk about that, but Brew Sisters are being real about it.
Okay.
Let's start with key person insurance, Vernon.
Okay.
How would that apply to the Brew Sisters and their business?
Okay. So, Bruce Sisters' name, let's give them Jenna and Alex. Okay. Jenna is the brains behind the operations, meaning that she does all the glue work, anything that needs to get done, ordering supplies, doing this, doing that. She's a very important part. She's the brain of the business. She will be considered a key employee. And in that key person or key employee insurance, what happens is the business, which is the Brew Sisters, would buy a policy on Jenna to make sure that if Jenna were to pass or Jenna were to get sick or anything could happen to Jenna, that the business will be able to get a payout on Jenna's life insurance policy.
Oh, okay. So it's not just about losing a co-owner. It's about losing anyone who has an important role in the daily success of the business.
Yeah. So right now we're just talking about a duo, right? This is a small business. I could say the Brew Sisters maybe bringing in maybe 6 digits a year, maybe 200,000 or less. And right now they're starting off small. So Jenna would still be a key person that they can use, and the business, the Brew Sisters, will be paying for that policy.
So you're saying they bringing in about 200,000 a year. So it's safe to have a policy that's 200,000 a year or 400,000 a year. What would be best fit so that in the event that one of them does pass, that the business still stays afloat?
I think it all depends on what the value it is that Jenna brings.
Okay.
So if they're making $200,000 a year, and the profit from that $200,000 may be, because even though they bring in $200,000, that's not the expenses, anything like that. But say Jenna is responsible for $150,000 of that profit. And they putting $50,000 in the expenses, that's crazy, but $50,000 into their expenses, and Jenna is responsible for $150,000 of that business. You put $150,000 policy on her as a key person. Okay,
so it's not just about keeping the doors open during crisis, and not even just about the money, but it's about having a plan in place so that when crisis occurs, they can make the best decisions in the worst possible circumstances or times, right? Okay, so let's move on because this next tool is your favorite, okay? This next tool is called a REBA, all right? And a REBA is a restrictive executive bonus arrangement. So in this case, Jenna wants to make sure that Alex, who is a co-owner, is also leads their marketing, community, and engagement.
Okay.
So to make sure she feels value and stays with the business for the long haul. How would a REBA work here?
Well, a REBA is what we like to call our golden handcuffs. This is to keep the executive, in this case, who is Alex, the marketing manager, to keep her on board with the business. She's a very influential. I mean, you can't have a business without marketing. So what we would do is we would really start with that R. R means restrictive. You would give her an amount of years, say 10 or 15 years, and you say, well, us, the Bruce sisters, we're making $200,000 a year. We're going to take $10,000 of that every year, and we're going to put it into a life insurance policy for Alex, and we're going to do it for 10 years. Let's say 10 years. 10 years times $10,000 is $100,000. Now, we're not talking about the compound interest or dividends that they would get by putting it in a permanent policy. But by the 10th year, then Alex gets access to that $100,000 plus amount of money that she'll be able to pull out either a tax-free retirement. She'll be able to take a loan from it. She'll be able to do all kinds of things, but she owns the policy at this point.
Okay, so it's not just a bonus; it's a long-term benefit.
It's like a deferred compensation. I'll call it that. It could be a retirement plan. They only plan on doing the business for 10 years. They're gonna sell it after 10 years. At that 10th year, Alex has this bucket of money that she can retire on, not including the equity in the company and all other things that might come with that.
So Jenna's not just rewarding her, but she's giving her a stake and a long-term success of the business.
Yep. I think a lot of small businesses do this when they don't have shares. They don't have they don't plan on going into the stock market. They don't plan on having this major business. The share in the business would be something like the life insurance policy.
But that's powerful, though, the ability to actually offer that.
Yeah.
To keep the business afloat and to keep that employee knowing that it makes the employee feel just valuable, even more valuable to the company, knowing their value to the company.
Now, the cool thing about it for the business owner is they would put that in their tax statement as a part of their salary. So it's like Alex got a $10,000 raise that she doesn't get a chance to touch for 10 years. So the company is also getting a tax incentive for giving her a raise every year.
Wow. You explained that very well. We could clap. Good job. That was explained well.
I'm trying to get better, y'all. I'm not the talker, but
on this episode, you're the talker.
Maybe it's the coffee. I don't know.
In honor of the Bruce sisters, yes. He has some coffee. I can't drink coffee, so I do have some tea though. All right, so we've covered the key person policy with the Bruce sisters. We've covered the REBA. Now we're going to go into another tool, which is called the buy-sell agreement. All right?
Yes.
So the plan is to keep the business running smoothly if the unthinkable happens. What if one of them, Jenna or Alex, passes away or decides to leave the business? How can a buy-sell agreement help the Bruce sisters navigate ownership changes?
Well, buy-sell agreement would mean that because they're a duo, Jenna buys a policy on Alex, Alex has a policy on Jenna. Let's say Jenna passes away, and we did double the business. So the business is making $200,000 a year. We want to make it where she can get 2 years of figuring out something because Jenna passes away. So $400,000 insurance payoff that she'll have, that she can either share with Jenna's family. She can then use a portion of that money to maybe replace Jenna. You never know. I mean, Jenna is she's the brain of the business, right? Alex is the marketing. Jenna is the brain with the operation. So maybe she have to buy, get another person. What they call them, baristas? They call them baristas when they talk about the people that do the beverages.
Making the lattes and stuff.
So finding another partner, or finding another barista that can come in and actually help with the operations and help keep that business afloat. This is very important, man. Like, buy and sell agreements is something that even if even what we have. So we're a business. We co-own a business. I have a policy on you. You have a policy on me. If I pass first, you get paid. If you pass first, I get paid. That's the business. If the business, is really important to us, we have to make sure that we have the insurance to make sure we protect the business.
Right. So I know you guys are thinking like, well, you guys are married. Of course you have a policy. These are two different types of things. There's a policy for us being married and protecting our family with us being parents. And then there's a policy protecting our business.
Yes.
Those are two different types of policies. And if you are in business with a family member or a spouse, you can make sure to have two different ones, not letting one overlap the other.
Yep.
All right. So as with the buy-sell agreement. Now, what if the Bruce sisters had, let's say, a couple of investors and other partners? How does the buy-sell agreement work when there are more than just two business partners involved?
Well, when there are more than two business partners involved, we're looking at like an entity purchase. So we're looking at the business then owning the life insurance. If the business owns the life insurance, that person passes, the policy is then going to be broken up amongst the rest of the owners, the three owners that are left behind, and they'll choose whether they're going to pay the family out a little bit or not. I always like to talk to owners like, look, make sure your family get a little piece of that,
Mm-hmm.
But if they're paying for the policy, the whole point of that is to make sure that the business owns it, and then that policy will be split into three people.
Absolutely. Now, as we're talking about the key person policy, buy-sell agreement, and the REBA, what's important, guys, is as the business grows, the policy should too, or like increase. So say originally, like you stated with Jenna and Alex, it was a $150,000 policy because the business was doing $200,000. Say some years pass and the business is now $400,000. It got to make sense. It can't be $400,000 and you still have this $150,000 policy.
I mean, sometimes you have to revisit. You have to revisit that stuff all the time. That's why people have more than one policy.
Yes.
They'll have a $150,000 policy and then they'll go get another one. Most likely they won't replace it unless the person is super healthy, because you get the age. As we know, life insurance is based off your age, your habits, in your medications.
Right.
So if they are still in that good health, you might possibly can replace it, but most likely most people just get another policy.
I mean, at the end of the day, like these scenarios just really show how in business, like Bruce Sisters or any business with partnerships, that how much you can benefit from protecting the future of your business through key person, through buy-sell agreement, and even through REBA. It's about planning for all the what ifs that can come with running a business and those things that we don't want to think about. It could come off cold doing a buy-sell agreement and setting that stump up. It could come off in a partnership like, man, can I really trust you? Why are you setting this up?
Yeah.
But it's important because I've seen a lot of businesses or even family-owned businesses, once a parent passes, the business shuts down or it closes down because these type of things weren't set up. Granted, there's probably a life insurance policy on the person on the family end, but on the business end, it wasn't set up. And that's why it closed. And that's why the business goes under, because those endeavors weren't set up in the first place.
Yep. We see it all the time. I would say in this sense, a lot of people think, well, that's too far away from me. I just started. It's only two of us. In this case, the Bruce Sisters was only two people. So I would say for you all, even if your business is making $50,000 a year, it don't hurt to have a $50,000 policy on the business owners, or $100,000 policy. It's all protection. Like we always talked about in the last one, we talked about hedge. You want to make sure that as you go up, you have this thing at the bottom, which is a hedge that keeps you from losing. You won't lose. You continue to win. Downside protection is what we specialize in. We're making sure that you don't lose.
Absolutely. And also to keep in mind, guys, that it's really important to actually have these conversations and talk about it a part of your business meetings, especially if you're thinking futuristic about your business, it's really important to have these conversations.
Yep.
So that's it for today, you guys. I mean, if you're a business owner, take a look at this and then take a look at what you have set up and see where you can implement these strategies. And after you do that, share the episode with your other business partner or other people you know in business who have a partner.
Yep. Until then, protect your business, protect your peace of mind, and take care, man.
All right, guys. Thank you for tuning in to Marriage, Family, and Business.
Thank you.
Marriage gets hard when you disagree. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commerce.
New beginning, prosperity, abundance. Family will continue to walk by faith, not by sight. We know that God will supply.
Did you know that over 70% of people buying homes end up paying PMI, private mortgage insurance? That means the bank is protecting their interest in your home, but what about you? Here's the reality: you don't buy PMI to help your loved ones, it's to help the bank. So let's turn that around. With mortgage protection, you have the power. Not only can you ensure your family keeps the home, but you also have options to get every penny of your premiums back or use that cash value for a tax-free retirement strategy. So if the bank is going to protect itself, isn't it time you protect your family and build wealth at the same time? Make the smart move, keep your home, protect your legacy, and secure a better financial future. Stay tuned for more on protecting what matters most right here on Marriage, Family, and Business.